Hello and welcome to UK and Australia property news. Today, we're bringing you a concise overview of the Australian property market outlook for 2025 to 2026. Whether you're an investor or a homeowner, this is the essential information you need to know. Let's start with the big picture. Australia's property market has seen record-high prices in recent years, and many experts believe this trend will continue, though growth may become more steady. According to research from Cotality, as of the end of 2025, national property prices are expected to have risen by about 8.6%. That pushes the median home price up to roughly AUD 714,000. Other forecasts suggest even higher growth, with SQM research predicting capital city home prices to rise between 6% and 10% in 2026. AMP's chief economist, Shane Oliver, expects growth in the 5–7% range. However, a recent forecast suggests a slightly more conservative estimate. Tim Lawless, research director at Cotality, anticipates national property price growth of 5% or lower in 2026. Not all areas will perform the same. Domain's 2026 property forecast indicates that Sydney and Melbourne are tipped to lead in price growth for houses, while Brisbane and Perth are expected to see the strongest gains in the apartment market. Unit prices are expected to outpace house prices in Brisbane, Adelaide, and Perth as more buyers shift to affordable homes. What's driving this? Low interest rates, strong government support policies, and ongoing demand from buyers, especially those looking for more affordable homes. Population growth also continues to be a key factor, with projections suggesting Australia's population will exceed 33 million by 2036, further fueling demand. It's not just about the big cities. According to Cotality, regional values were up 9.7% compared to the capital city's 8.2% in 2025. Why? More buyers are searching for affordable options outside the main urban centers. Apartments in Brisbane, Adelaide, and Perth are set to outpace houses as more people seek manageable property investments and comfortable, budget-friendly living. For investors, that means there are great opportunities beyond the traditional hotspots. If you're thinking about diversifying your portfolio, now is the time to consider regional markets and high-demand apartments. Let's talk about the rental market. Demand for rentals remains strong, especially in Sydney, Melbourne, and Canberra. Rents are rising thanks to higher household incomes and a tight supply of rental properties. Domain forecasts record rents across all cities by the end of 2026. Interestingly, apartment rents are increasing even faster than house rents in many cities. That reflects a growing demand for smaller, more affordable living spaces, which is great news if you're looking for solid rental yields and stable tenants. However, in Perth, after several years of strong rental growth, the pace may start to slow down this year. Vacancy rates across the country remain below 2%, favoring landlords. Policies are also shaping the market. The Australian government's 5% deposit scheme is helping more first-time buyers enter the market, especially for lower-priced properties. This is driving demand and price growth at the entry level. The expansion of the Home Guarantee Scheme, removing limits and income caps, provides further support for first-home buyers. The Help to Buy scheme set to launch will further assist eligible Australians with smaller deposits and mortgages. Some experts estimate that, thanks to the 5% deposit scheme, prices in certain areas could climb as much as 6.6% in the first year of implementation. But there are also uncertainties. The Reserve Bank of Australia is keeping a close eye on inflation and interest rates. RBA Governor Michelle Bullock has flagged a possible rate increase if inflation cannot be contained. While some economists predict the cash rate will stay on hold through 2026, the potential for rate increases remains a key risk. If rates go up, this could affect buyer demand and slow down price growth. As always in real estate, timing and expert guidance are key. What about the future? More homes are being built, and by 2026 the supply of new housing is expected to increase. Approvals and commencements for dwellings rose through 2025, indicating an increase in supply for 2026. However, construction costs and labor shortages continue to suppress supply. At the same time, population growth is slowing down a bit, meaning the market could gradually become more balanced, with a little less pressure on prices. While Australia's population growth remains high, projections suggest a gradual slowdown over the next decade. Vacancy rates are still low, but they're expected to rise slightly, giving renters and buyers more breathing room. Household incomes are slowly but steadily recovering, which could help both buyers and tenants in the coming years. So, what does all this mean for you? If you're considering investing in or selling Australian property, now is a strategic time to act. With prices set to rise in targeted markets and demand still strong in affordable segments, a well-planned move can deliver great results. With us, we specialize in connecting international buyers and sellers with the best opportunities in Australia and the UK. Our expert team offers up-to-date market analysis, one-stop service for buying or selling property, access to exclusive listings and pre-market opportunities, guidance through every step, from initial research to final settlement. Whether you're looking to invest, sell, or simply want to know more about your options, we're here to support your journey. Visit our website at www.homesglobal.com for the latest listings, insights, and free consultations with our advisors. If you found this video helpful, please like, subscribe, and share. Stay tuned for more updates from the Homes Global team, your reliable partner for overseas property investment. Thank you for watching, and we look forward to helping you achieve your property goals.